what is up YouTube? In today's video, I'm going to be talking about AT&T stock and whether it's a buy or not. So AT&T stands for American Telephone and Telegraph Company and has been around since 1885. It is also the largest telecommunications company in the world. So let's talk about what exactly they do. So AT&T's business is divided into four segments: communications, Warner Media, Latin America, and Xander. So first, let's talk about the major portion of their business, which is communications. So this part of AT&T's business provides wireless network services and equipment, business services, and entertainment services to both companies and residential customers across the US. So communications accounts for three things, which is mobility, entertainment group, and business wireline. So first, let's talk about mobility, which accounts for 39% of revenue and is the largest component of the communications segment. So AT&T Mobility provides a full range of wireless voice, messaging, and data services to consumer and enterprise consumers. So it's basically the phone plans you have, which they give you data and you pay every single month. The reason I like this so much is because it's a subscription-based business model where they have 143 million subscribers. So the second part of the communication segment is the entertainment group, which provides video including over-the-top or OTT services, which is AT&T TV Now. They also have a couple more. They also provide broadband and voice communication services primarily to residential customers. Now, this is also a subscription-based business where people pay them every month in order to keep their service or product. But one thing you have to keep in mind is AT&T's DirecTV and AT&T Now is actually losing subscribers. They lost a cumulative 1.21 million subscribers in the past quarter, but their broadband services are continuing to grow. Another thing you have to consider is this only accounts for around 25% of their revenue. So the third part of AT&T's communication business is business wireline, which is the smallest portion of AT&T's communication segment, but it does play a vital role for AT&T and businesses across the US. Now let me explain. This portion of the business offers advanced IP products as well as traditional voice and phone services to businesses across the country. So these are vital services to businesses which allow them to run. So the second segment of AT&T's business that we're going to be talking about today is Warner Media. So Warner Media is a leading media and entertainment company that creates and distributes popular content. One of the largest TV and film studios known as Warner Bros., which produces things like the DC movies and TV shows. They also manage sites like Bleacher Report, and they have growing streaming services like HBO Now, Boomerang, and the DC Universe. They have also recently launched HBO Max, which has been doing really well so far. Other than these services, they also create video games which they have made money from. Some of their notable video games are like Batman Arkham Knight and Mortal Kombat. And Warner Media accounts for around 11% of AT&T's revenue. So the third segment we're going to be talking about is AT&T's Latin America business, which is one of the smaller segments for AT&T as it only comprises of 4% of their revenue. So this segment of the business offers phone, video, and data plans to the citizens in Latin America and in Mexico. So the fourth and last segment of AT&T's business is Xander. So Xander is AT&T's advertising services branch, which utilizes data insights in order to provide targeted advertising opportunities, and it accounts for roughly 1% of AT&T's revenue. Now I'm going to be talking about what I really like about AT&T's business model. AT&T is a subscription-based business model. I like this a lot because customers will have to pay every single month, and they will continue to pay because if they don't, their data will be stopped and they won't be able to use the internet on their phone. Unlike a mortgage where it will take a couple months to kick them out, AT&T can just stop their data pretty quickly. So now, even though AT&T isn't growing at a fast rate, they've been able to get consistent revenue and earnings throughout the years. And not only that, a lot of tech companies during this pandemic have been hurt, but I don't think AT&T will be hurt as badly because they provide an essential service which people will have to be paying every single month. So now I'll be going over their basic stock info and their financials and decide whether it's a buy. So now I'm just going to be talking about their basic stock info. So AT&T trades under the ticker symbol T, and they're currently trading at $30.06. So the company's entire valuation or market cap is $213 billion. Their PE ratio is 15.23, and they also pay a dividend, and their dividend yield is 6.82%, which I will be talking about a bit later. But now let's just look at their financials. So first I'm going to be talking about their revenue and earnings, and one thing you have to consider is this isn't a growth company. It's not like Microsoft or Amazon that's growing at a really fast rate. This is a safe dividend company, and one thing you can really appreciate about it's very consistent with their revenue and earnings. So first we're going to be talking about the annual reports, and then we'll look closely into the quarterly. So in 2018, they reported $170 billion in revenue with $19.37 billion in earnings. However, in 2019, they reported $181 billion in revenue and $13 billion in earnings. So we can see a dip in earnings but a rise in revenue, and that's because they invested a lot into their business. Now we're going to be talking about the quarterly earnings report. So in quarter one 2020, a lot of tech companies saw a huge dip in their revenue earnings. But for AT&T, they didn't see a huge difference. So in quarter four 2019, they did $46.82 billion in revenue and $2.39 billion in earnings. However, in quarter one 2020, we saw a $42.78 billion in revenue and $4.61 billion in earnings. So what you saw there is a rise in earnings but a drop in revenue, and that's obviously because people lost their jobs in the lockdown and all of that. Now we're going to be talking about their balance sheet. So AT&T's balance sheet is actually pretty good. They have current assets of $54 billion, and current assets is basically cash and cash equivalents, so it's liquid money, and they have non-current assets of $496 billion. They have liabilities of $349 billion, which leaves us with stockholder equity of $184 billion. Now, stockholder equity is basically total assets minus total liabilities, and if you guys want more information on this, you could check out my balance sheet video, which is in the description, or you could check it out on the top right corner. Now, the reason why this is so good is because it gives us a price to book value of 1.21 or book per share value of around $28. So that basically means if the company sells everything and decides to shut down the business, we will get $25 a share. To calculate book value per share, you just have to get the total amount of stockholders' equity and divide it by the common shares. And if you do this for AT&T, you get about $28. So now we're going to be talking about the statistics. First, I want to talk about their PE ratio. So right now, AT&T is trading at a 15.84 PE ratio, and this is actually where it's been hovering for the past couple years. But what you have to consider is the rest of the market is currently at an average PE ratio of 22. And the reason why AT&T isn't like that either is because the stock hasn't really skyrocketed since we saw the correction. All the other stocks really went up 20, 30, 40%, and the S&P 500 is up 8%. As of this year, the Dow Jones is up over 0.1%, while AT&T is still down to 5 to 6%. So now I'm going to be talking about their dividend. So their dividend yield is 6.82%, and what's really good about this company is they've been raising the dividend for the past 34 years. And so this is a dividend aristocrat, and that is one reason why I'm actually looking to invest in this company. The only concerning part about it is the payout ratio is 105%. So a payout ratio is the percentage of profit paid back to investors, but AT&T won't have any money left, so they won't be able to invest in their money into their business. But they do have a lot of cash which they could invest into the business soon. Now we're going to be talking about their competition. So I'm not going to be talking too much about competition, but their main competitor is Verizon. Now, the one reason why I like AT&T more is because AT&T's business is very diversified, while Verizon has 80% of the revenue coming from their wireless services. Now, the second thing that I would like to talk about is AT&T has a better overall balance sheet, with AT&T having $184 billion in shareholder equity and Verizon having around $60 billion in shareholder equity. Now, in terms of revenue and earnings, both companies are very similar. Now, another thing is I don't think one company's revenue or earnings will just go way above the other, because to gain subscribers is actually a lot harder than you think, because one person will have to leave one telecommunications company to join another. Now, another thing I would like to add is the dividends. Now, AT&T offers a higher dividend rate, and not only that, they've been paying dividends a lot longer. They've been raising the dividend for the past 34 years, while Verizon has been doing it for like 12 or 13. Now, 5G is a great opportunity for both telecommunications company, and Verizon is investing more into 5G, but I think both companies are very planned and suited for 5G, and when it becomes popular, both companies will do very well, which I do think will be a bit after the pandemic. So now I'm going to be talking about whether the stock is a buy or not. First, I'm going to be talking about what I like about AT&T. First is a subscription-based business model. The second is their balance sheet. The third is their consistency, not only with their revenue and earnings, but also with their dividends. I also really like their dividend yield and how they've been raising it for the past 34 years. Now, another thing I also like is their huge potential with 5G, and I really think AT&T is very safe because it is the biggest telecommunications company. So I bought a couple shares at $30, and I'll really start building a position if it drops like 10-15%. Other than that, I'm only planning to buy this company because it pays dividends, and I don't really have many dividend paying companies in my portfolio. I also think this can do very well in the long term. Now, another thing I want to add is I'm not a financial advisor, so you always have to do your own research. And if you enjoyed this video, leave a like and subscribe. Also, comment down below what stocks you want me to analyze or any other suggestions you have, and thank you.